Hey guys, welcome back. In today's video, we are talking about the naked shorts caught, Citadel exposed, the AMC squeeze, and many more in this video. Firstly, we have huge news. You can see here, breaking, Genius Group just filed a $250 million lawsuit accusing Citadel and Virtue of naked short selling GNS. They told retail it was a conspiracy. Now a public company is suing over it. So this is something that we've already been talking about even before the lawsuit officially came out. What we talked about recently was how multiple executives were leaving Citadel, making us think that something is happening. And we also knew that Genius Group was making a lawsuit against naked short selling and how those two could be very likely to link together. And what we are looking at right now is how Citadel is, of course, being sued here. You guys can see, along with Virtue. Now, it's no surprise to Citadel and Virtue. We aren't surprised about these short sellers. We aren't unfamiliar with them. They are also the same short sellers of AMC as well. But now you can see in terms of what we have always been talking about is that these firms have been the ones that have been naked short selling and the ones that have been suppressing the price of our stocks. And what's more important about this, you can see here, Roger, the CEO of Genius Group, so he's obviously made a public statement in regards to this lawsuit, and he talked about Citadel and Virtue. Now, the thing that I find the most interesting, or the thing that I want to highlight the most in this, is what they talk about for Genius Group in terms of what they talk about with what the methods that these guys are doing. You can see the class action complaint filed today that defendants engaged in long-standing and widespread manipulative trading scheme centered on repeatedly spoofing Genius Group stock. So spoofing is a manipulative and illegal trading practice that involves submitting and then canceling buy or sell orders without any genuine intent to execute them. Does that sound familiar? Because that's the very same things that happens to AMC every single day. Now for AMC, there are also a few more firms that are not mentioned here that we've talked about in our videos as well. But you can see what we talked about with how spoofing is something that is manipulating the price. And then you can see what he goes on to talk about further that I think is very important to note is that you can see on 98% of all trading days during the class period, defendants repeatedly entered spoofing trades designed to manipulate the price of Genius stock. Defendants entered dozens, sometimes thousands of such trades on a given trading day, canceling them within milliseconds of placement. Once again, something we're familiar with because it's what happens to AMC. But now you can understand every time we've talked about spoofing and the reason behind it. But it doesn't stop there because you can even see here, defendants repeatedly built massive short position through off-exchange trading over a few trading days and then bombarded the market with spoofing trade, causing significant declines in the price of Genius Group stock. So now we should all understand where we are going with this. The things that are mentioned in this lawsuit that is submitted against Citadel and Virtue is talking about everything we have been always talking about as apes. Everything that apes has all done their due diligence, wherever it's spoofing, wherever it's dark pool, you can see how it's being used here. And so it's why we've said that the shorts have always been constantly manipulating and suppressing the price of AMC. And it's why we said this lawsuit could be something that is extremely pivotal for this case. Now, it doesn't just stop there. Now, I highly recommend you guys to take a look at this because you can see everything that they are doing in terms of the methods that they're doing. Now, if you watch these videos, you would know what they have done, but this is just from the CEO perspective, from the lawsuit perspective. But you can see here what we talked about with off exchange, 68% off exchange on a dead stock, make it make sense. And so we've always said this, if AMC is a dead stock, why are they constantly trading AMC? And why is it that the off exchange is always so high? And now we have a literal lawsuit which showcases what's going on. And this isn't just the only thing that off exchange is doing, but you can see how this is obviously done to manipulate the price of a stock. But like I said, it doesn't stop there because you can see here, the plot thickens. Genius Group to take action against Robinhood, Fidelity, and more brokers that took away the buy button. So not only are they talking about the certain institutions that are shorting Genius Group, but they're also talking about the brokers that are helping them. Now, Roger once again came out and made a statement, and the worst 4 offenders in his quote is this: Schwab's, Fidelity, Vanguard, and Robinhood. Now, straight off the bat, once again, we're seeing some familiar faces within these. And so, before we even continue any further, I just want to say to all the apes that all of the due diligence that you have done, everything that we have talked about, not just in the past year, but from the very start, and everyone who's been ridiculed by these guys saying that we are making up facts, we are not understanding the market, we are dumb money, this is actually what's happening. The CEO of Genius Group, who's made a lawsuit, has come out and talked about the exact things that we've always been talking about. And so we have to understand, we have always been right. We knew exactly what was going on, and this is finally getting out. This is finally allowing the regulations to take some consideration into actually what's going on. And so we have to realize these market makers, the Citadel and Virtue, they are hiding market manipulation and securities fraud behind internalization trades, self-clearing and hedging their risk with derivatives, abusing the bona fide market, making exemptions Rule 203. And so it's what we talked about. Whether it's with the firms that are mentioned like Citadel and Virtue, whether it's with the brokers, you can see how all of these institutions are coming together to help one another to screw over the retail. And it's why this battle has been such a difficult battle, because we're not just fighting the institutions who are shorting against us, but also the very brokers that are, making us difficulties to buy shares that we want to buy into. And so this is what's going on right now. Like I said, this is very important to know what is going to happen, because this is something that's extremely pivotal. And you can see Cecile Adam and Ryan Cohen, once this lawsuit goes into discovery, you both should file a lawsuit against Citadel Securities and Virtue Financial. When it's discovered them manipulating the price of our securities, causing low prices, you have a case. And the reason why we say this is because, like we've said, the reason why Genius Group is in a better position, it's because they have a smaller sample of data that they have to collect as opposed to AMC and GME. Now, we are extremely happy that something like this is obviously happening, where we are forcing actions to be taken. But then it's not only that, we don't just stop there. It's about understanding that if this really gets, and once again, nothing is yet confirmed. Like we've said, this lawsuit has been submitted, but we're not seeing anything as of yet. But if we are able to, just like Travis said, go into discovery, if we are able to see more attention on this, you can really see what's going on. Just remember, AMC and GME has obviously experienced this for far longer. And one thing that I still want to talk about, which I don't think Adam Aaron has yet addressed, was, for those of you who remember, Adam Aaron previously, he said he wasn't allowed to buy stocks of AMC because he held on to big news. Now, Genius Group lawsuit, this isn't something that just started recently. They have been preparing for this for a very long time. It's just that today, or the recent days, they have finally submitted. So potentially those two could also be correlated. Just like we said with Citadel and this lawsuit, this very same thing could be also related. And so we could really be looking at something huge to go against these naked shorts. The retailers could really take control against these naked short sellers right now. And so it's no surprise that with all of this going on, we're seeing why people are suddenly starting to buy as much AMC as possible, especially the ones who are most susceptible to get squeezed by AMC. We talked about this Thursday. UBS declared acquisition of more than 4% of the AMC float. Yesterday, Pentwater declared 9.5% ownership. But now what we're looking at is how more and more firms are buying into AMC. Now, firstly, we've already seen institutional accumulation going up. But recently, we've really been seeing how they're stepping the gas on that. But then, going back to what we said earlier, it's not only that, but it's the short sellers of AMC who are also buying AMC as well. We see Citadel buying AMC, we see Goldman Sachs buying AMC, we see UBS who, whilst they aren't a direct short seller of AMC, they are holding on to the short positions in which they've inherited from Archegos, from Credit Suisse, and you're seeing then buy AMC as well. So you can see why we've said everything right now is all starting to link together. And we have to understand, if this lawsuit is successful and we can fight back against these naked short selling, you can understand how AMC will see a massive movement. And if you want to take a look at this as well, AMC just triggered a pattern we've only seen once before, and today's new all-time low makes it unmistakable. Last time AMC showed this kind of accumulation with shorts equally loaded against a recovery was the 18 months leading to Jan 2021. The charts are nearly identical. So if you're a fan of previous data, if you're a fan of historical data, you're a fan of the technical analysis, this is what we're looking at. Now, normally you understand, for those of you who watch my videos, you will know I don't just talk about technical analysis, but the only times I would use past data would be if there are other factors that are involved. And we've talked about these factors, whether it's the fact with institutions, with short sellers of AMC buying more and more AMC, whether it's fact with these lawsuits. These are all the factors that are in play right now. And it's why when we look at this technical data, when we look at this historical data, I think it's extremely important to factor that in as well. Another big thing you can see here, Clearstreet opens new 30 million position in GME with 1 million shares. So not only are we seeing people buying AMC, but we're seeing people buy GME as well. Now, this shouldn't come to you as a surprise because remember, we're in this together. So both AMC and GME, when they see the opportunity, they should obviously seize it as well. So people realize this, and that's why people are accumulating both AMC and GME. And you have to realize the market does not follow fundamentals as much as people think. There is tons of overvalued stocks like Nvidia, Palantir, Netflix, and tons of undervalued stocks like AMC and GME. The market is not retail, it's institutions looking for retail counterparties at these prices. Now, the reason why I say this is because you can already see, we are seeing how people are just buying AMC. Once again, if you take a look at the net flow of AMC, you will see that there are much more inflow than there is outflow, meaning there's a lot more capital buying AMC shares than there is selling AMC shares. Yet we still don't see the price go up. Now, with what we talked about at the very start with this lawsuit, you understand why it's not going up because of manipulation. But it's also about understanding the fact that that then just shows how undervalued we truly are. And it just shows why these institutions, and what I want to emphasize here, quietly accumulating as much AMC as possible. Because we've talked about this already. If you take a look at all the news articles that are talking about AMC and GME, you will see that it's all telling people to stay away or sell your shares. It's not telling people to buy it. It's not, no one's telling, no media articles is saying buy AMC, buy GME. And rather the opposite is that they're saying to sell AMC, sell GME. However, the institutions are then completely doing the opposite of what these media articles are saying and quietly accumulating AMC. And I think that's the key importance that we obviously have to get away from here. And if you take a look at really what's going on in the overall market, once again, another factor that's coming into play here, you can see Wall Street the last few months like nothing was wrong. Then the NY Fed suddenly calls an emergency meeting and half the usual suspects start showing stress fractures. Citadel dumping real estate, BNP and UBS flashing credit warnings, Jane Street getting punched by ETF volatility, and you can see many, many more. And if you want to take a look at another historical data in comparison, today's disruptive bubble and the 1929's glamour bubble. And we've already shown you different eras already. We've shown you with the 08, we've shown you with in the past, but you're looking at how right now the market is going to that overvalued state where easily if something were to go wrong, and in this case, we're talking about if the over leverage, the overexposure of these firms were to go wrong, multiple institutions could go down with it. We're seeing the market crashing if that happens. And you can see the reverse repo facility has dropped from 2.5 trillion to near zero. What does this mean? No more flood of free flowing money. It's back to competing for dollars, which could mean higher deficit costs and slower growth if rates climb too fast. Brace for volatility. Like we've said, reverse repo, it's going to zero. And that means now these easy access of liquidity is no longer there. So if you're going to think that these short sellers are going to have an easier time of shorting AMC just because AMC is at $2 as opposed to $3, well, actually, that's not the case. Because now it's even difficult for them to get that money like they did. Because previously, they had access to 2.5 trillion. Now, only a mere 1.56 billion. You can see the Federal Reserve is having an emergency meeting with Wall Street bankers on liquidity concerns. And the reverse repo is very low, what a coincidence. You have to realize these two things aren't directly related in the sense that reverse repo does not mean the liquidity of the whole industry. However, the very fact that reverse repo is at zero would mean that if liquidity does become a massive issue, then they can't even help out. And so we've already talked about this. It's why, no wonder the stocks and cryptos are falling, because we're seeing the big drop. Remember, it's minus 100.33% compared to last week's average of 13.8. We've talked about this. You can see it go up, but in the end, we're looking at this slowly drying away. The illiquidity issues is becoming more and more serious by the day. And the reason why that's concerning isn't just because of the illiquidity issues, it's the fact that there's an illiquidity issue on top of the fact that everyone's over leveraged, overexposed, on the fact that massive volatility could signal massive drops in excess liquidity, which then could equal to margin call potential. And so you have to understand the extremely concerning, you can see 2008 versus 2025 credit default swaps. We're looking at the same situations, but this time it's for AI, whereas previously it was for the housing market. And so we are not in that position. This isn't me trying to create fear to you guys. This isn't me saying that a market crash is going to happen tomorrow when the market starts. But rather, right now, there are so many warning signs all showing to how badly managed some of the institutions risk. And then when you add on to the fact that there's little liquidity to borrow, and you add on to the fact now the short sellers, the ones who are going to go down first, are seeing the dam starting to crack, you really start to see why they're getting worried. As always, none of this is ever financial advice, so do take out a current of someone. Make sure to do your own due diligence and research, and I'll catch you guys next time.